Okay, let's unpack this. Have you noticed, really noticed, how the world feels increasingly chaotic lately? Polarized, uncertain. It's more than just a fleeting feeling you get scrolling through your newsfeed. There's actually a compelling framework that suggests we might be right on schedule for this kind of global turbulence. So today, we're diving deep into a really fascinating concept from historians Neil Howe and William Strauss. It's called the fourth turning. And look, this isn't just some abstract theory. It's a powerful lens suggesting history moves in predictable cycles. And, well, believe it or not, we might be smack dab in the middle of a major crisis phase right now. Our mission today is to truly grasp what this fourth turning actually signifies. Why does it seem to be happening right now? How could its unfolding impact, everything from global markets to your own personal investments? And crucially, what actionable steps can you maybe take to prepare for what might be ahead? We'll be extracting the most important nuggets of knowledge from the sources provided, including a really fascinating video from Coinbureau that lays out these ideas with striking clarity. Think of this deep dive as your shortcut to being well-informed. We want to give you insights into the underlying forces at play and what might be next, so you're not feeling overwhelmed, but instead, maybe feel equipped to face the future with a bit more confidence.
Yeah, and what's truly compelling here is precisely that idea, the notion that these turbulent periods aren't just random, isolated events, but rather part of a larger, predictable pattern, a pattern that's repeated throughout history. It offers us, I think, a powerful way to step back from the constant noise of the daily headlines and see the bigger picture, to understand the deeper currents at play that shape our collective destiny. So we're going to explore the core ideas of Strauss and Howe, looking at the cyclical nature of history and the distinct phases societies typically experience, phases which seem to inevitably lead up to these intense, transformative times. It really provides a historical context that makes the present moment, well, much more comprehensible.
Right. To really get a handle on where we might be headed, we first need to understand the historical roadmap Howe and Strauss laid out. So, back in 1997, these two insightful authors and historians, Neil Howe and William Strauss, they published this groundbreaking book called The Fourth Turning, An American Prophecy. And in it, they proposed a pretty startling idea, that history moves in these predictable cycles, each one lasting roughly 80 to 100 years.
Which is significant, right? That time frame.
Exactly,
Yeah.
because it's approximately the length of a human lifetime. And that's a key part of their generational theory. They argue that as different generations succeed each other, their collective experiences and societal roles are what actually drive these cyclical shifts.
Okay, so it's generationally driven.
That's the core idea. And each of these broader cycles is then divided into four distinct turnings. Think of them like the four seasons in a year, and each of these phases typically lasts for about 2 decades. According to Strauss and Howe, these generational cycles have played out repeatedly throughout history, fundamentally shaping society, culture, politics, the whole shebang, really. Each turning has its own kind of prevailing societal mood, specific collective behaviors, and characteristic types of events.
So like seasons changing the landscape.
Precisely. So let's quickly recap these four turnings. First, you have the high. This is a period characterized by strong institutions, collective confidence, and significant social cohesion. Think of the years following World War II, maybe from the late 1940s through the early 1960s. During this time, you saw booming economies, remarkably stable family units, a widespread sense of national purpose, rising living standards for a lot of people.
A time of relative calm and consensus.
Exactly. Strong consensus, trust in established systems, a feeling that society was moving together toward shared goals. Institutions were generally robust and well-regarded. Then society transitions into the awakening. This is when younger generations, often those who came of age in the relative comfort and conformity of the high, they start questioning established norms. They push vigorously for personal freedom, cultural change.
Ah, so the 60s and 70s vibe.
Totally. Imagine the energetic, sometimes chaotic vibes of the 1960s and 70s. This era saw widespread challenges to authority, experimentation with new lifestyles, powerful movements for social change, civil rights, environmentalism, the counterculture.
Right, a focus on individualism.
Yeah, a surge in individualism, a desire to break free from perceived societal constraints, focus on authenticity, personal liberation. Often leads to cultural clashes with older generations, naturally.
Okay, and after the awakening.
Following that comes the unraveling. This period is marked by growing individualism, a noticeable weakening of institutions, and a distinct breakdown in consensus across society. This sounds pretty familiar, right? It's quite similar to the culture wars, the increasing political division, the economic instability that many of us have witnessed since the 1980s, really right up to the present day.
So things start fraying at the edges.
Exactly. It's a time where society gradually splinters into competing factions, where compromise becomes harder. Trust in both public and private institutions continues to erode. People feel less connected to collective goals, more focused on personal or group identities. It leads to a general sense of drift, a growing incapacity for collective action.
And that brings us to the final phase.
And finally, we reach the fourth turning the crisis. This is the period we're really focusing on today, as it's the phase we appear to be entering, or frankly, are already deep within. It's a time of deep, often existential crisis where old systems collapse and societies are forced to fundamentally reorganize themselves.
So not just a downturn, but a real restructuring.
A fundamental restructuring. History shows these periods often involve severe challenges, major wars, widespread revolutions, devastating economic crashes, or profound, pervasive social unrest. It's a crucible moment, a true test of a society's resilience and ability to adapt. Old certainties get swept away, and new societal structures are forged in the fire.
And if we connect this to the bigger picture, it's actually quite remarkable that Neil Howe predicted this decades ago. He suggested we'd start entering this turbulent period sometime between the mid-2000s and the early 2020s. And if you just look around today, I mean, the source material is pretty clear. We seem to be living through a fourth turning right now.
It certainly feels that way sometimes.
Right. And the significance of a fourth turning isn't just about the immediate turmoil, though that's undeniable and often painful. It's really about how it fundamentally reshapes society and the economy for generations to come. It creates new norms, new institutions, a whole new collective identity.
Okay, so it's a reset moment, in a way.
A major reset, and maybe a useful metaphor here to grasp what this period represents, is to think of it a bit like a controlled forest fire.
A forest fire. That sounds destructive.
Well, yes, it's undeniably devastating in the short term. It burns away all the old growth, seemingly leaves behind only desolation. However, that fire is actually absolutely necessary for new growth to emerge. What's really burning away in a fourth turning are often the unsustainable dependencies, the brittle structures, the unhealthy alliances maybe built during the unraveling, the very systems that looked robust but were, in fact, inherently fragile.
Oh, okay. Clearing out the deadwood.
Precisely. Old systems break down, often unsustainable debts are reset through various mechanisms, inflation, default, restructuring, and from those ashes, new institutions rise. Healthier, more adapted to the new reality. It's a painful process, no doubt, but ultimately cleansing and regenerative. It clears the way for a new high eventually.
That makes sense. Can you give some historical examples of that kind of reshaping?
Sure. Think about major crises that completely reshaped global orders. World War II, for example. It wasn't just a devastating conflict, it utterly reshaped the global order. It led to the creation of international institutions like the UN and NATO, the Bretton Woods Agreement. These radically altered geopolitical and financial systems, ushering in a new era of, well, relative peace and prosperity for a while.
Right, the post-war boom, the high we talked about.
Exactly. Or look at the U.S. Civil War. After that, the United States underwent profound social and economic transformations. It paved the way for America's industrial rise, cemented federal authority, ended slavery. These weren't just disruptions, they were fundamental reorderings of society.
Okay, so these are massive foundational shifts.
Massive shifts. And today we're seeing signs of a similar seismic shift. The economic models that have dominated the past few decades, characterized by rampant globalization, increasingly easy credit, free-flowing capital, they're clearly coming apart at the seams. You see policymakers worldwide grappling with massive imbalances, unprecedented levels of debt, experimenting with fiscal policies we've never seen before, just trying to manage the fallout.
Trying to keep the plate spinning?
Pretty much. So whether we like it or not, the sources suggest it really seems the fourth turning is indeed upon us. And that means the way things work, from your job to your investments, could be profoundly impacted.
Okay, connecting those dots, the immediate question becomes, why now? Why are these pressures reaching a breaking point right now, converging to create this intense period we find ourselves in? Our sources point to several deeply rooted imbalances that have been building up for decades, like a slow-motion tectonic shift finally culminating in an earthquake.
Right, it's not sudden, it's cumulative.
Yep. Exactly. The first major factor is the decades-long buildup of economic imbalance. Now, while the post-World War II era saw unprecedented prosperity, the real acceleration of debt accumulation and historically low interest rates, that really kicked into high gear after the 2008 global financial crisis. Governments, corporations, even individuals took advantage of this ultra-cheap debt to borrow enormous amounts of money.
Fueled the everything bubble, some might say.
For a time, yeah, it fueled economic growth, sent asset prices soaring. It felt good, like a seemingly endless party, but it was fundamentally fragile. This reliance on ever-increasing debt, artificially low interest rates, continuous credit expansion, it simply isn't sustainable forever. It's like constantly adding more weight to a rickety bridge without ever reinforcing the structure. Eventually, it's going to buckle.
And we're seeing those strains now.
Absolutely. Today, global debt stands at levels never seen before, pushing countries and entire economies to their absolute limits. The system showed obvious cracks in 2008 and then again after the pandemic, forcing governments and central banks to step in, ease policy, essentially just kicking the can down the road rather than addressing the core issues.
And that can kicking wasn't accidental, was it?
No, not at all. It was a series of deliberate policy choices, things like maintaining those ultra-low interest rates for over a decade, engaging in successive rounds of quantitative easing that pushed these structural imbalances further into the future. But now it's created a much larger, more volatile problem. This postponement just delayed the inevitable reckoning and probably amplified its potential severity.
Indeed. And the economic pressures you just outlined are immense, but what really compounds their severity and truly defines this perfect storm are the equally profound shifts happening on the social and political fronts. We've seen significant political and social fragmentation that's been steadily growing for decades.
Yeah, the division feels palpable.
It really does. Trust in governments, financial institutions, even the media has continuously deteriorated. People feel increasingly disconnected, disillusioned with the institutions that are supposed to serve them, seeing them as out of touch or maybe self-serving. And at the same time, wealth inequality has only increased. You have a shrinking percentage of elites accumulating more and more wealth, while middle and lower classes struggle with stagnant wages and rising costs.
That gap seems wider than ever.
It does. And the source even notes that this divide could widen further with AI stepping in, automating jobs currently held by everyday people. This raises that thorny question: what happens to large swaths of the workforce? It's even led some elites to propose ideas like universal basic income as a solution, which, ironically, could boost their wealth even more through asset ownership while potentially creating a dependency class, further altering the social contract. It's complex.
And this inequality fuels
What?
populism?
Exactly. This growing gap between the wealthy and everyone else has fueled intense polarization and populism around the globe. Within the fourth turning framework, this signals a deep societal dissatisfaction, a demand for radical change from perceived elites. It's not just a political trend, it's a symptom of the unraveling accelerating. The public loses faith in established institutions and seeks disruptive, often charismatic leaders.
We've certainly seen examples of that.
Absolutely. Figures like Donald Trump in the U.S., Giorgia Meloni in Italy, Javier Milei in Argentina. These are movements demanding real change, often characterized by nationalism, anti-globalism, seeking to upend traditional power structures, reallocate resources, often along identity or ideological lines. They aren't just empty promises, they represent a fundamental societal cry for a different way forward.
Okay, so economic stress, social division, what else is feeding into this?
Well, another crucial element contributing to this period is the gradual geopolitical shift, specifically sparked by China's rise over the past several decades. After the Cold War ended, the U.S. initially enjoyed, unmatched global dominance, economically, militarily. It was a unipolar world, American influence largely unchallenged.
The end of history moment, some called it.
Right, but history had other plans. China's steady ascension since the 1990s, fueled by its economic reforms and strategic investments, has increasingly challenged that American dominance. This has become a slow-burning rivalry, intensifying competition over trade practices, technological supremacy, think of 5G, AI, quantum computing, and military power in key regions like the South China Sea.
And this echoes past turning, very much so. These tensions closely resemble those seen during previous fourth turnings, where the emergence of a new great power disrupts the established order. Historically, the rise of a competing superpower almost always profoundly disrupts the existing global order and fosters instability. It's a natural rebalancing, but it rarely happens without significant friction as each power seeks to assert its influence.
Makes sense. And you mentioned demographics earlier, yes. And finally, there's a critical demographic factor, what you might call the lost wisdom. The generation who truly understood the devastating lessons of the last fourth pan, turning those who experienced World War II firsthand, lived through rationing, immense sacrifice. The existential threat of global conflict, they've largely passed away now?
The greatest generation.
Exactly. And with them, society has lost invaluable wisdom gained through extreme hardship and collective purpose. The memory of what real existential crisis feels like and what it takes to unite and overcome it has faded from direct lived experience. In their place, new generations are stepping into leadership roles. Now, unlike previous generations who lived through monumental events like World War II and the Great Depression, these new leaders haven't experienced an existential crisis of similar magnitude.
So less caution, perhaps.
Potentially. This lack of first-hand knowledge might make them more inclined to challenge or even dismantle institutions, possibly underestimating the severe consequences this could have. It's a dangerous gap in collective memory, leaving society potentially ill-prepared to make the hard choices necessary when faced with profound adversity.
Wow. Okay, so when you put all that together,
So, connecting all these dots, what does this all mean? Well, taken together, these deeply rooted economic imbalances, the steadily growing political and social fragmentation, rising geopolitical tensions with China, and this pivotal generational transition, they've created the conditions for what you can only really describe as a perfect storm. These are not random, isolated events happening simultaneously. They are the culmination of decades of trends and pressures that are slowly but surely reaching a breaking point. This convergence of powerful long-term forces is what defines the profound and transformative nature of a fourth turning.
okay, let's get into this then. The pressing question is, just how severe could this fourth turning actually become? You know, the old saying, history doesn't repeat, but it often rhymes. What can history teach us about what might lie ahead during such a turbulent period? Strauss and Howe's work suggests fourth turnings bring profound crises that reshape society right from the ground up, affecting economic, political, social structures, everything.
Like those examples you gave earlier.
Exactly. Previous fourth turnings in American history include the American Revolution forged a new nation, new political system. The U.S. Civil War fundamentally redefined federal power, ended slavery. The Great Depression leading into World War II created a new social contract, a new global institutional order. Each of these crises severely disrupted existing institutions, forced societies to undergo fundamental transformations. And today, Neil Howe himself believes we're heading into similarly turbulent waters, facing a reckoning that will reshape our world.
It's a sobering thought. Let's first consider the potential economic consequences, especially given the massive global debt we've talked about. When debts reach unsustainable levels, governments generally have three main ways to respond. One, they can cut spending substantially, but that's usually politically toxic.
Very popular.
Two, they can default outright on their obligations, but that destroys creditworthiness and global trust, often leading to isolation.
Also bad.
Or three, they can try to inflate away the debts. And historically, inflation has been the preferred political path. Why? Because it quietly reduces the real value of debt without overtly slashing services or hiking taxes, which, as we said, are deeply unpopular measures that often lead to social unrest.
The stealth option.
Kind of. But while inflation benefits governments by devaluing their liabilities, it devastates ordinary citizens. It erodes their savings, destroys their purchasing power. We got a glimpse of this reality during the pandemic, didn't we? Governments worldwide resorted to printing money, essentially, causing the prices of everyday essentials to surge. And this approach disproportionately benefited the wealthy, those who own assets that tend to rise with inflation, widening those societal divides even further, potentially fueling more social fragmentation.
So inflation is the likely path, but it's painful for most people.
It often is. And if inflation escalates beyond control, governments typically don't just give up. They often double down by imposing heavy-handed measures like financial repression.
Financial repression. What exactly does that entail?
It's not just the quiet erosion of wealth through inflation. Financial repression involves active government intervention. Think of it as a subtle but powerful way to channel wealth towards managing sovereign debt. This can manifest in various ways. For example, forced investment mandates, where pension funds or banks are required to hold low-yielding government bonds, even if they're unattractive investments.
Trapping capital.
Exactly. Or direct capital controls, preventing you from moving your money out of a country freely. It's also involved artificially suppressed interest rates historically, forcing savers to accept returns that don't keep pace with inflation, effectively transferring their wealth to the government over time. These are explicit tools to redirect wealth, often at the expense of the average citizen's financial well-being.
Okay, that sounds pretty concerning. And beyond these economic implications, what about the geopolitical risks you mentioned?
Yeah, the geopolitical landscape today also poses an alarming risk, especially those simmering tensions between the U.S. and China. The source material highlights that a single geopolitical misstep, say something happening in the Taiwan Strait, could potentially escalate very quickly into direct conflict between these two superpowers.
A flashpoint.
A major flashpoint. And it suggested this might be more likely than many people realize, possibly even as soon as 2027, as both nations become more assertive on the global stage. Now, just imagine the aftermath if such an event were to occur. Global supply chains would likely seize up almost immediately. Commodity prices would soar to unprecedented levels as critical resources become scarce or inaccessible. Widespread panic would almost certainly grip financial markets worldwide, leading to a profound economic shock.
A global shockwave. Absolutely. This would fundamentally alter the international order, forcing nations to choose sides. And we can already see early signs of this polarization happening, right? You got the Western nations kind of aligning on one side, and then the burgeoning BRICS countries, Brazil, Russia, India, China, South Africa, this bloc that's increasingly seeking to challenge the existing global financial and political order, pushing for things like de-dollarization, a more multipolar world.
The lines are being drawn.
They really are. Such a conflict would represent a fundamental realignment of global power, with incredibly far-reaching consequences for everyone.
And while that's happening externally, what about internally?
Right.
Meanwhile, at home, those internal divisions we've seen building up over decades, the political polarization, the culture wars, the growing mistrust, they could very well ignite significant political and social instability. Fourth turnings historically fracture societies deeply along ideological lines. This causes governance dysfunction, makes it hard to get anything done, and increases the risk of internal unrest, maybe even civil strife in extreme cases. Consensus becomes almost impossible, and the body politic struggles to function effectively, making it much harder to address external threats or internal challenges.
So pressure from within and without.
Exactly. However, history also provides a potential silver lining to this very dark cloud.
Okay, I could use a silver lining right now.
Well, what's truly compelling here is that while fourth turnings are undoubtedly challenging, incredibly painful often, they also tend to foster unity through shared struggle. People often come together in times of great adversity. They rediscover a collective sense of purpose, forge new societal bonds. The crisis forces a society to confront its deepest flaws and decide what truly matters, what it stands for.
Crisis creating cohesion.
In a way, yes. But reaching that stage, achieving that unity, often means accepting stronger governmental controls, potentially temporary sacrifices of personal liberties for the perceived greater good, and unfortunately, significant economic pain for many. It's a path through fire to emerge stronger on the other side, but that journey is rarely easy or without significant cost.
Okay, so given all this potential turmoil ahead, high stakes economically, geopolitically, socially, how exactly could markets and, say, crypto fare during this fourth turning? As you might guess, given the instability we've discussed, it's probably no surprise that markets could become highly volatile, highly unpredictable as this fourth turning unfolds. Renowned financial historian Russell Napier, who's mentioned in the sources, suggests we're likely entering a prolonged era characterized by financial repression, elevated inflation, and potentially tight capital controls.
Not exactly a recipe for smooth sailing.
Not at all. There's that classic saying in investing circles, economic expansions don't simply die of old age, they are murdered. And today, there seems to be no shortage of potential catalysts for such an event, from intensifying global trade wars to China's posture towards Taiwan, or even unforeseen internal ruptures. Now, this doesn't mean you should panic sell everything and head for the hills, but given that we seem to be heading deeper into this fourth turning, a cautious, informed approach is absolutely essential. Understanding these deeper forces is crucial because they'll likely determine how severe and lengthy any potential downturn might be.
Right. So let's maybe consider two potential market scenarios that could play out. First, you could have scenario one, relative calm, perhaps, if inflation continues to cool down, as it has shown signs of doing recently, even with ongoing tariff pressures and supply chain issues, and if the economy slows but manages to avoid a full-blown deep recession, well, that could create conditions for stocks and maybe even crypto to rally for a period.
A relief rally.
Could be. And this might be fueled by some form of liquidity easing, maybe not directly from the Federal Reserve doing QE again, but perhaps from other institutions, like the Treasury engaging in bond buybacks.
How are Treasury buybacks different from Fed QE?
It's a crucial distinction. The Fed doing QE literally creates new money out of thin air to buy bonds, directly expanding the monetary base. Treasury buybacks, on the other hand, typically use existing government cash, or they issue shorter-term debt to retire longer-term debt. So while both actions can inject liquidity into the bond market and influence interest rates, Treasury action is more about managing the existing debt structure. It might signal specific government priorities without directly expanding the money supply in the same aggressive way as Fed QE. It could provide a temporary reprieve for markets.
Okay, so that's the calmer scenario. What's the alternative?
Well, the alternative is scenario 2, turbulence ahead. Any positive sentiment from scenario 1 could rapidly unravel if inflation resurfaces stubbornly. This could happen due to ongoing trade disruptions, geopolitical conflicts flaring up, or other unexpected supply-side shocks. Under those conditions, the Fed would likely be forced back into aggressive tightening, raising rates sharply again. That could easily trigger a sharp market downturn and drive the economy into a deep recession.
And then the Fed is stuck.
Exactly. This leads us to a critical dilemma for policymakers, especially the Fed. They find themselves caught squarely between a rock and a hard place. It's almost like a ship's captain trying to navigate a treacherous strait.
Okay, an analogy. Lay it on me.
On one side, you have this massive whirlpool of inflation. The temptation is to fire up the money printers again, ease policy aggressively to save the economy from recession. But doing so risks getting sucked into hyperinflation and causing a complete loss of confidence in the currency.
The inflationary whirlpool. Got it.
Yeah.
What's the other side?
On the other side, you have the jagged rocks of a deep recession. Simply cutting interest rates to boost growth might not work if you still have stubborn underlying inflationary pressures that refuse to go away. You still have to fight inflation, even amidst economic pain.
So, risk hyperinflation or risk a deep recession with potentially limited tools.
That's the difficult position. And economic turmoil of that magnitude could further inflame the geopolitical tensions we've already discussed. This could mark a significant low point for markets, perhaps the darkest phase of the fourth turning. If that scenario unfolds, stocks and crypto could fall far, far lower than many investors currently expect, as the very foundations of the financial system are tested.
Wow, that's sobering. And Napier also mentioned a shift away from speculation.
Yes, he suggests we're transitioning into an environment where highly speculative, hyper-financialized assets could truly lose favor. The era of easy money, ultra-low interest rates that dramatically boosted speculative markets fueled by cheap capital, abundant liquidity, that era appears to be ending. This implies that the crypto and economic cycles we're currently living in might actually be the last of their kind, at least for the foreseeable future in their current form.
The end of an era for certain types of investing.
Potentially. Towards the end of this decade, the companies, and specifically for crypto, the projects that survive and thrive, will likely be those delivering genuine real-world adoption and sustainable revenue. The focus will shift towards tangible value rather than purely future promises or speculation.
Survival of the fittest, in a way.
Very much so. In crypto's case, we may end up with significantly fewer projects than we have today. The entire space could shift dramatically, focusing less on pure speculation, more on quality, real-world protocols. Only the strongest projects, those with solid fundamentals, proven utility, maybe a healthy financial runway, will survive this coming period of tightening and emerge stronger on the other side.
Okay, let's bring this home. Connecting these profound shifts back to you, the listener. How should you think about investing your hard-earned money to not just survive, but potentially even thrive during this monumental shift that the fourth turning seems to represent? One thing that seems abundantly clear by now is that the usual investment playbook, it might not cut it. We saw this clearly in the 2022 market downturn, didn't we? Traditionally safe assets like bonds, which were supposed to shield investors, took heavy hits right alongside equities. They offered very little diversification benefit when inflation spiked.
Yeah, the 60-40 portfolio got hammered.
Exactly. So in this emerging fourth turning, characterized by potentially high inflation, capital controls, financial repression, significant geopolitical uncertainty, a fundamentally different strategy seems necessary. Fortunately, we do have valuable insights from experts like Russell Napier and Neil Howe based on historical patterns to guide us through. So let's break down how you might prepare looking at different asset classes.
Okay, let's start with bonds. Historically, bonds were the go-to safe haven, right? Offering steady returns, security, especially during economic downturns. But in this emerging environment, bonds could unfortunately become a remarkably risky bet. As we've covered, global debt is massive, and governments often choose to quietly inflate away this debt rather than make those unpopular spending cuts or tax hikes.
The path of least resistance.
Often, yes. And as inflation really takes hold, bondholders will demand higher yields to compensate for the eroding value of their money. This inevitably causes existing bond prices, especially those with longer maturities, to fall. Existing bonds lose value in real terms. Simply put, holding traditional government or corporate bonds during this fourth turning, especially long-dated ones, could prove quite dangerous for your portfolio as their purchasing power gets slowly but surely siphoned away by inflation and potentially rising rates.
Okay, so bonds might be less safe than perceived. What about equities, stocks?
Well, the narrative for stocks could flip entirely. Over the past decade or so, growth-focused tech stocks, fueled by cheap capital and globalization, produced those amazing outsized returns. They dominated market indices. But now, this new economic landscape shaped by things like deglobalization, supply chain reshoring, national security priorities, it's likely to favor more tangible sectors over those growth-focused tech plays.
So less focus on software, more on stuff.
Kind of. Think infrastructure, defense, commodities, manufacturing, energy. We could see governments worldwide ramping up spending in these essential areas, rebuilding economies, restoring critical supply chains, boosting national security in a more fragmented world. Specific examples, maybe companies involved in renewable energy infrastructure, advanced materials manufacturing, cybersecurity for defense, critical minerals extraction, even traditional agriculture. Shifting focus towards these tangible, essential sectors could position your portfolio to weather and potentially even thrive amid this coming upheaval as they become the new pillars of government and societal investment.
Interesting, a shift from intangible to tangible value. What about commodities?
Commodities could be key. When inflation and currency devaluation strike, precious metals like gold and silver historically perform exceptionally well. They act as a store of value when confidence in fiat money wavers. Gold especially stands out, not just as an inflation hedge, but potentially as a new kind of reserve asset if confidence in traditional fiat currencies continues to deteriorate, which might help explain why gold has had such a sustained rally recently, hitting new all-time highs. It's like a barometer of distrust in the system.
So gold as a potential safe haven.
Potentially. And besides precious metals, other essential commodities, think oil, copper, uranium, agricultural products, they could also perform strongly. They have indispensable roles in economic activity and national security, particularly in a world grappling with supply chain vulnerabilities and geopolitical tensions. These are the fundamental building blocks of any economy, and their demand is likely to increase, or at least remain robust, in a more fragmented world.
Okay, and finally, cryptocurrencies. What's the takeaway there?
Well, as we touched on before, it's likely that many, maybe even most, cryptos simply won't survive the next deep bear market, especially in an environment with higher interest rates and tighter access to credit. The easy money era for purely speculative projects is probably over.
So how do you identify potential survivors?
Beyond the established heavyweights like Bitcoin and maybe Ethereum, the key is really to look for cryptocurrencies gaining genuine real-world adoption. These will likely be the ones carving out specific niches, maybe in payments, decentralized finance, DeFi, but with real utility, gaming, or decentralized infrastructure like storage or computing.
What does real-world adoption actually mean in this context?
Good question. It means projects with strong network effects, maybe a clearer regulatory pathway, proven revenue models that go beyond just speculation, a growing and active user base, and importantly, projects that are solving genuine, demonstrable problems for businesses or individuals, things that provide actual utility. Remember, most cryptos will likely see significant declines from their previous bull market highs when, or if, a deep bear market sets in. However, the ones with actual adoption, genuine utility, and sound tokenomics stand the best chance of emerging again once the next bull market inevitably comes around. They could potentially be stronger than ever as the industry consolidates around real value.
Right. So focus on utility and fundamentals, not just hype. Beyond these specific asset classes, what else should people be thinking about? Two key things come to mind: geographic diversification and a fundamental mindset shift. First, geographic diversification. In an era of potential capital controls where governments might restrict the movement of money or the transfer of assets across borders, diversifying where you hold your assets becomes absolutely critical.
Don't keep all your eggs in one jurisdictional basket.
Exactly. You'll want to consider holding assets in jurisdictions that seem less likely to impose strict controls or financial repression, maybe places with a stronger tradition of rule of law, perhaps less sovereign debt relative to their economy, or more neutral geopolitical stance. Now, exactly where you diversify depends heavily on your own research, your circumstances, your risk tolerance. But the core principle is clear. Diversification across geographies could be crucial.
And the mindset shift.
And the mindset shift. It's essential, I think, to shift your investing mindset away from simply chasing the highest possible returns towards a more fundamental goal, preserving your existing wealth. In really challenging times, the investors who truly succeed aren't necessarily the ones making the biggest gains on paper. Often, they're the ones who manage to limit their losses most effectively. It becomes about resilience, protecting what you have.
Capital preservation becomes paramount.
Precisely. Prioritizing capital preservation, managing downside risk over just aggressive growth. This might mean focusing on assets that retain purchasing power, even if they don't offer explosive returns, and maybe having a substantial cash buffer or other liquid assets readily available for opportunities or emergencies.
So this brings us back to the big question. What happens next? Where does this all lead? Yeah, that's the multi-trillion-dollar question, isn't it? There are so many unknowns here. Exactly how all this unfolds, precisely how long it could last, what other implications might arise, honestly, it's anyone's guess. But if history is any guide, if this framework holds true, we're likely entering, or are already in, the difficult, darker period before we eventually get to the brighter era of relative peace and prosperity that historically follows fourth turnings. It's likely a challenging road ahead, but one that ultimately leads towards renewal and a new societal order.
Yeah, the period ahead could indeed be significantly challenging. It might force us all to adapt, to rethink many of our long-held assumptions about how the world works, how economies function, how societies hold together. But hopefully, armed with a clear understanding of what's potentially coming, drawing on the insights gleaned from these historical cycles, you, the listener, are now perhaps better equipped to navigate these uncertain times. And as you contemplate all this, maybe consider a final thought. What new institutions, what new social structures, what new ways of organizing ourselves might emerge from the ashes of this fourth turning? And how might your current actions, your choices, your preparations contribute, even in a small way, to shaping that future? We'll certainly be here trying to make sense of it all every step of the way, keeping you informed. If you found this deep dive valuable, please remember to follow, like, and share the podcast. It really helps us out. And you can also follow What Bitcoin Taught Me on Twitter, X, Nostr, Bluesky, Threads, Instagram, Facebook, and LinkedIn for more insights between our deep dives. Thanks for tuning in.